This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on Thursday, May the 3rd, 2018. Our time is 8:08 Mountain. To connect with Harold, his website, rarecoloreddiamonds.com, the telephone number 1-800-432-1022. We believe in hard assets in a portfolio, and we will talk more about that throughout the show. Today, here's an update. US dollar, 92.52. Canadian dollar, 77.72. Gold, 13.14. Silver, 16.49. Gold-silver ratio, 80. Platinum, 900. Palladium, 966. WTI, 67.50. Brent, 72.73. Nat gas, 272. Bitcoin in US dollars, 93.10. Bitcoin in Canadian, 11,968. The Dow starting the day off at 23,924. S&P, 2,635. NASDAQ, 7,100. TSX at 15,627. And we will have information on gas prices here in Canada. And they are very, very high. To give you an idea, in Edmonton, the low price right now, and you can always find it at Costco, I might add, 117.4. The high price is 134.9. The average price is 125.7. To give you an idea, out the West Coast, their low price, 143.9. The high price, 163.9. The average, 157.5. And to give you an idea, we do have a story in our free weekly newsletter about gas prices here in Canada. In fact, in Vancouver, when it's based on gallons, not liters, it's coming in at close to $5 a gallon, $4.77 a gallon, roughly at this point in time. Harold, we'll talk more about it as the show goes on, but that's one of the things that's really becoming a crimp here in Canada. Higher oil prices, problems with supply and refineries. So we have much higher gas prices. And when you go to fill up, you better find a low price because it's definitely going to hit your pocketbook for sure.
Well, that's almost double the price in the United States. So that's very, very concerning. Add to it the inflationary impact of it and high interest rates or rising interest rates in Canada and the United States. It's a reason to be concerned. Again, I don't think that people are earning as much money, and when the cost of living goes up that much, it's concerning. So this week was very volatile, especially for the gold market and the currency markets, because here's another perfect example of the relationship between gold and the U.S. dollar. So the U.S. dollar rallied very strong this week. Actually went from 89 cents that it was at last week, and is now trading at around 92.5. So it's actually made about a 3.5 cent increase. And what that did to gold was drop gold down to 1306. So 1300 is heavy support for the gold market. So it got fairly close. And now the market's trading at 1314. But again, it is flirting with the support level of 1300. And that was based on the fact that the dollar did rally this week. Now, we know that even though we're raising interest rates in the United States, and there should be at least 3 more interest rate hikes this year, the fact is that the interest rate market was going up, but the dollar wasn't strengthening. So it showed us, and we've talked about it several times, that we felt that the U.S. dollar was being held back because the White House doesn't want a strong U.S. dollar because it's going to hurt U.S. exports, and that's what Trump is trying to build. But he couldn't stop this rally, obviously, and the market went up about 3 cents and dropped the price of gold by about $45 to $50 this week. So that's substantial. Silver fell off also. Getting a strong rally in oil. Oil's back up to $67, $68. So again, there is now rumblings about inflation coming back, which is one of the reasons that the Fed was raising interest rates, was to curb inflation. Now, this has only really happened maybe a couple times before. I know it did happen in 1980. The gold hit its all-time high back then of $850. It was also during a time when interest rates were going up and inflation was at almost its highest level. In fact, by 1982, I believe it was, interest rates were up to 22%. Try getting a home mortgage when interest rates were at 22%. So the fact is that the dollar was strong, the gold market was strong, and inflation was up there, which is a very rare situation, which is almost identical to what's happening right now. The price of gold, instead of sitting at about 1,000 or 1,100, is sitting at 13 to 1350. On top of that, we've seen interest rate hikes. However, the and strength of the U.S. dollar, but aside from this week, the gold market has not really gotten into any trouble. So is it possible that we could see higher interest rates, higher inflation, and higher gold prices? And the answer to that is yes. It's happened before in the early 80s, and it could easily happen again. There's so many situations in the marketplace at this point that could disrupt what we're doing that you really have to be sharp and conscious about everything that's going on. Speculating at this point is difficult because most people don't understand the futures market or even understand how to trade stocks, and that's not a slight towards people that trade. The fact is that 90% of the people that trade the stock market and the commodities markets lose their money. So if 90% are losing and maybe 10% are winning, the odds are not in your favor unless you're an expert trader. So the fact is that you have to be very, very cautious. Now, a day trader type of thing can almost trade off of the U.S. dollar gold relationship. And this week was a perfect example because you had the gold market fall off about $40. And on a 100-ounce contract, that's a substantial move in 1 week. So you've got that situation. And then the dollar went up 3 cents. So you're talking that if you played the dollar up and gold down, you made a ton of money this week. But again, this is not something that I'm recommending for the novice trader because if you don't know what you're looking for, you're not going to be successful trading. And the last thing that I'm going to recommend to our listeners is that they go out and trade futures markets. It's a very risky market. It is certainly not suitable for most investors, and it is something that we very highly recommend that you don't do. But to buy long-term gold on the upside or to buy the dollar on the upside, and the way that you would do that is the same way as we did it with the euro. When the euro first came out, our recommendation to our Canadian clients was to sell off their Canadian dollars and buy the euro when it was at 89 cents. And ultimately, the euro ended up going to $1.65. So even on just buying the physical currency with no leverage at all, our clients still did extremely well. So the fact is that when these opportunities do arise, these are situations that we look at. Some of them are shorter term, some of them are longer term. This situation with the dollar can be played both ways because if you happen to get the trend where the dollar is going to rally, if that's what is actually going to happen, and there's no real fear of inflation hurting us, then you have to short the gold market. And it's the opposite situation that if gold is rallying and the dollar is weakening, well, then the trend could be changing to a weaker dollar. That's the benefit of listening to the show because every week we're able to tell you where those markets sit and if we see a trend happening. We caught a trend back in 2000, which turned out to be the largest bull market in metals ever seen, and we caught it from day one. We caught gold at 250, which was the ultimate low, and caught it all the way to the high of $1,920. Biggest bull market of all time. And then we all know what happened after that. But the fact is that if you can catch a trend in a market, you can make an awful lot of money. And just because gold fell down to support this week does not in any way, shape, or form mean that we're not still bullish on gold. We feel that there's enough geopolitical situations out there, the potential of higher inflation, and the fact that they want to keep the dollar weaker is going to play into our hands. We're going to make a lot of money in these markets once they do get set. And again, I've traded these markets since the late 70s. And I've got to say that I've been through two massive bull markets in gold in my lifetime. And I've traded those markets for over 35 years, along with currencies and oil and other commodities. So I would like to say that I have a fairly good handle on what makes these situations go. The other thing is that I'm very conservative, so I don't ever recommend leveraging positions, because leverage can work for you, and it's great when it is going your way, but when it goes against you, that's why 90% of people that trade those markets lose their money. There's a lot of feeling in the market right now about a massive decline in stocks. In actual fact, the Dow has been down 5 days this week, 5 out of 5 of the last trading days. In fact, the Dow is now below 24,000, but that's not the move we're looking for. The ultimate move in the Dow, if this market does fall apart, is going to be massive. It could drop 50% like it did back in 2008. So there are situations out there, derivatives markets, the bond market, markets like that can hurt us tremendously. You've got to be very, very cautious, because in 2008, one of the biggest reasons why the Dow went from 14,000 to 6,500 was because of the derivatives market. It actually helped bankrupt Lehman Brothers and Bear Stearns. And those are still in the market. It's in the quadrillions of dollars, and they're unregulated. So, it's a very, very frightening time, because at any day we could wake up and find a dramatic situation in the marketplace that leaves people destitute in their investments. Because let's face it, in 2008 and 9, when the markets fell by 50%, it took 7 or 8 years for the market to get back to break even. And most people never stayed in that market, so they ended up losing everything: their retirement funds, the money they had in the market for investment and speculation, everything. And those days could be right around the corner. We could wake up one morning and find the Dow down 1,000 or 2,000 points. So, again, be very, very careful. We all want to make money, but making money in today's markets is extremely difficult. The interest rate market is still low. You can't get any return on investments keeping your money in the bank. So what that does is it forces people into riskier markets like stocks and commodities. People sit back and see the Dow going up and up and up, and they feel they're missing out on something, so they jump in. Well, you don't jump in after a 10-year market that has not declined in any way, shape, or form. So, again, be very, very careful. We should see higher interest rates coming, but it's not going to be enough to where we could make return on our investment by keeping it in the bank. Unless you're getting at least 10% or 8%, it's going to be very difficult for you to retire if you have your money sitting in stocks, because nobody's made money, any massive amounts of money, unless you're an expert trader or have inside information. So, again, at this point, be very, very careful. The hard asset market is a great place to have assets, because they're not leveraged. You own them outright. And we do believe over the intermediate to longer term that gold is going to be a phenomenal market again. Continue to listen to the show. We'll always update you as to what is happening in those markets. And what we're always looking for is a trend that is going to start, that we could catch at the beginning. And they come very, very few and far between. But we have had success in choosing those markets. And it's been documented. In 2000, it was only us, our radio show, and John Embry, who chose the gold market at $250. A lot of people jumped on the bandwagon after and took credit for whatever, but everybody knows that the two major factors in the gold market back in 2000 was our radio show, the World Financial Report, and John Embry. So the fact is we caught that whole gold market, and that was a godsend. Many of our clients became wealthy because of the gold and silver move. And then we had the run in oil. It went from $18 to $150, and we were in that market all the way through. Again, clients made fortunes during that time. And then there was the currency markets, where we caught major moves in currencies. Now, don't get me wrong, there's been plenty of times in my career that I've missed the market or called the wrong market. But the fact is that we've had much more success than we've had failures. And when the markets have gone against us, in many occasions, we've been able to get out with minimal losses type of thing. So nobody's going to be right 100% of the time, but I would put our track record in these markets up against anybody's.
Connect with Harold. His telephone number, 1-800-432-1022. 1-800-432-1022. The website, rarecoloreddiamonds.com. One of the top stories this week, a billionaire has put half of his net worth into gold. Some big investors are seeing warning signs ahead for the markets and are holding big positions in gold. Egyptian billionaire Suarez is taking action. He's put half of his $5.7 billion net worth into gold. He said in an interview Monday that he believes the gold price will rally further, reaching $1,800 an ounce from just above where we were earlier in the week, $1,300. Well, overvalued stock markets will crash, he believes. He says, in the end, you have China, and they will not stop consuming. And people also tend to go for gold during crises, and we are full of crises right now. And he's based out of Cairo. $5.7 billion, half in gold. Get our free weekly newsletter. We have that story and much more. You can go through it in minutes or spend hours. It's really up to you. But you work hard for your money. You work many, many hours. You need to profit and protect that money. You work hard for it. You want it to obviously be there when you need it. You don't want to lose it. And at the same time, you want some growth. And we're in very chaotic times when it comes to the financial markets and geopolitical. Get our free weekly newsletter. Connect with Harold. 1-800-432-1022. The website, rarecoloreddiamonds.com. Now, yes, in the Fed, down in the United States, they did not raise interest rates. But there is talk of possibly 3 or 4 rate increases this year. Goldman Sachs sees the Australian dollar falling to 72 cents. We have that story. You can read it, and makes me wonder, usually the Canadian and Aussie dollar track pretty closely, so what will be happening to the Canadian dollar? One of the stories that came out this week, here in Canada, and this is not a surprise, heavily in debt. Canadians, the jump in mortgage rates will further tighten the debt vice for Canadians. And one of the things that the head of the Bank of Canada, Stephen Pelosi, came out and gave a speech during the week. And he says he expects the nation's high household debt levels will persist for years, leaving the economy more sensitive than before to interest rate increases. And he said that he is going to keep a real eye on the debt level, and he will base a lot of his decisions raising interest rates on that. He says he needs to be worried about the sheer size of the debt and will be closely watching the impact of higher borrowing costs on the most vulnerable households. And that's something that came through this week. And the Fed left interest rates unchanged here in Canada. A few weeks back, they did as well. And there's a huge concern about the mountain of debt that Canadians have. In fact, it is a record 2.1 trillion Canadian. And that's probably going to hold interest rates back as they raise rates in the United States. That means the Canadian dollar will no doubt go down in value. Now, one of the other top stories we had this week, it's in the newsletter. Oil hedge fund manager says $300 oil, not impossible. Pierre Andurant, one of the oil industry's most prominent hedge fund managers, said the current reluctance of energy companies to invest in new production meant $300 a barrel was not impossible within a few years. He often espouses a very bullish view. He said in a series of tweets on Sunday that concern about the impact of electrical vehicles on future demand was limited and limiting investment in projects with long lead times. So paradoxically, these peak demand fears might bring the largest supply shock ever. If oil prices do not rise fast enough, $300 oil in a few years is not impossible. And those tweets were later obviously deleted for some reason. But he came out and he said that he really believes that $300 oil is a possibility. And we know that over in the Middle East, they would love to get oil back to $100. And as we talked about off the top of the show in Vancouver, $5 a gallon, $1.62 a liter, $4.77 a gallon. And that is, it's really, Harold, a tax on the everyday average person when they go to the pumps. If, like you said, people aren't getting raises of large magnitude, you go to the pumps, you're going to feel the pain. And this is from Gas Buddy, Dan McTeague. He says that it could actually get worse. Vancouver has a serious supply problem. And even when things get back to normal, because there are some shutdowns due to maintenance, he said that the summer driving season will raise up the prices further. To give you an idea, on 162, the gas price in Vancouver, 110 cents is the fuel price, 51 cents the taxes. So taxes are really killing people as well on the gas price. But hey, in Vancouver, in British Columbia, and I grew up in Kelowna, I love BC. They don't want a pipeline from Alberta that may help them have more oil so they could actually bring down the cost of the gas price. It's a little perplexing, to say the least. But Harold, this summer could get very interesting if Vancouver's at 162, maybe up around $1.80, $2. That would be very scary.
It would. And the ramifications from higher oil prices is terrible on the economy because, let's face it, things in Canada are not great right now. In Alberta especially, things are very, very tight. So people are tight with money. They raise interest rates in Canada, and everybody's in debt there. So it's harder to carry the debt. It costs you more money every single month. Your mortgage is costing you more every month. And then on top of that, because oil prices are so high, people are not going to travel as much. With a weak Canadian dollar, Canadians are not going to travel that much anyways. They're not going to go to the States where the U.S. dollar is higher, go to Europe where the euro is higher, so they'll basically stay at home. Normally what they would do is drive and go on driving vacations. But if the cost of gasoline is higher, then they're not going to do that as much either, which means that the hotels don't do well and the restaurants don't do well and the shops don't do well, and it affects the overall economy. So oil is such a key commodity in our lives, and when these type of things happen, and don't forget, it's not only in Canada. The fact is that there's major problems in the Middle East right now. You've got Syria, you've got Israel, you've got Saudi Arabia, you've got Iran, you've got all these hotbeds going on at this particular point. And in all reality, a lot of them affect the oil market. So a rise in oil prices at this time is not a good thing. The consumers, the Canadians especially, are going to hurt from this. And what we really need to see is that the prices are going to stabilize. But $300 oil is extreme. But then again, so is $150 oil. So we're going to have to see what happens. Oil's sitting at $67, $68 right now. Obviously, gas prices are going higher. Heating oil prices during the fall and winter are going to go higher. We've got to hope for something to go in the marketplace to help people make some money, because if they're not getting a raise at work, something's going to have to change. And Canadians are frugal by nature anyways. We watch our money. So the fact is that things that are out of our control, like higher oil prices and higher food costs and higher cost of living because interest rates are higher and rents are higher and cost of real estate is higher, it's a very, very difficult time. There's no doubt that we are going to see inflation coming, which is another reason that you want to look at hard assets like gold and diamonds that do very well during times of high inflation.
Speak with Harold about hard assets, gold, silver, diamonds, 1-800-432-1022. His website is rarecoloreddiamonds.com. In the diamond section of our newsletter, a great quote from Josephine Johnson, Global Marketing Director for Rio Tinto Diamonds. She says it takes an impossible set of ancient and geological circumstances to create the miraculous array of golden, pink, red, and violet hues only found at the Argyle mine in Western Australia. The pinnacle of these is the rare and collectible tender diamonds, which have been referred to as the Fabergé eggs of the future. And this is in a story that you can read. Colored diamonds gain popularity as they fetch high prices at auction. And we do know that less than 0.1% of the volume of diamonds from the Argyle mine are pink, of which the number of red and violet stones can be counted on the fingers of one hand. We're talking about the rarest of the rare when it comes to colored diamonds. Also in the newsletter, a 16.5 carat diamond from Dorrance Hamilton, the estate, could fetch $800,000. And another week, another huge diamond is found in Botswana. Lucara Diamond has found another huge diamond in its mine there. The company unearthed a 327 carat top white gem diamond just 2 weeks after finding a 472 carat light brown stone. We have that story in the newsletter and a picture of the diamond as well. As I've explained before, I was reading an article. One of the reasons they're finding these big diamonds now is new technology is out in the marketplace for mining, and those stones in the past would have been pulverized as they went down the chain of obviously being found and down a conveyor. They would have been pulverized. Now they have a system in place where these big stones get through. But Harold, as we've seen in the past, they break them down and put them into multiple different stones, but they're not easy to sell. As a big, big diamond, it's one of those things where they're not easy to sell at all.
No, you're talking that very few people in the world could afford a diamond of that size or type of thing. 100 carat deep flawless white diamond, can sell anywhere from 30 to 40 million. How many people in the world could ever afford a diamond like that? So, but the fact is that these are nature's art. These are the most amazing gems that come out of the earth. So it's just such a thrill to see and hear about them. Fortunately, I've been in the diamond business for a long time, so I've held many of these diamonds in my hand. I've got my own collection of diamonds that I look at from time to time that just brings a huge smile to my face. So my wife wears a magnificent 14 karat flawless yellow diamond, a named diamond. So fact is that diamonds are beautiful. Diamonds are a great store of wealth. They're a long-term investment that will do extremely well for long-term investment. And if you don't need to cash them in yourself within your lifetime, to pass them down to the family, your children and grandchildren, is when these diamonds really pick up tremendous value. We've seen that happen countless times. So, with today's marketplace, the example that you gave, Randy, about the Egyptian billionaire putting $2.7 billion, half of his net worth, into gold, that takes a lot of guts to do. But also, to make $5.5 billion in your lifetime, you've got to be a very special type of person, very intelligent person. So obviously, he's done his homework. He's not just saying, I think I'm going to put half my money into gold. The feeling is that there's going to be a major change in the world markets. The feeling is that the U.S. stock market is getting ready to make a dramatic move on the downside. It's going to catch the entire general public by surprise like it always does. But the fact is that the wealthy people in the market will already be out of the market when that happens. It's always the general public that ends up getting hurt because they don't have the information or the knowledge in which to do. You don't know how to put stop losses in your position or place sell orders in the market to make sure that you get out, or what market orders are, or anything like that. So, the fact is that your financial advisor in most cases will always say to you, if the market does drop, it always comes back. But who has 10 years for the market to come back if you're in your 60s or 70s? So be very, very cautious. It's a good time to diversify. Get some gold into your portfolio. Get some diamonds into your portfolio. They can be sold in other currencies. Gold is a great hedge against inflation and currency devaluations and things like that. So, again, where the markets are tough, not a lot of people are making money in the markets right now. We've obviously got inflation starting to rear its ugly head. We've got situations happening in the Middle East, Russia, China, the United States, Iran. All these situations right now are hotbeds. And we can wake up any day and find out that we're in trouble. So make the right moves. If you need help with your portfolio, how to put stops on stocks or things like that, give me a call. I'll spend as much time with you as you need. And it would be my pleasure to help you make the right decisions as far as getting your portfolio in a situation that it can withstand any of these devastating situations. So, again, it's a time to be cautious. It's not a good time to speculate into leverage, but it is a good time to look at alternative assets as a way to build wealth over the longer term.
Connect with Harold, 1-800-432-1022. 1-800-432-1022. The website rarecoloreddiamonds.com. There was a story this week about a woman in Russia who was a grandmother. She worked in a rocket factory and made about $400 a month. And she was day trading oil to get by financially. And she was doing it via an app out of Russia quite successfully. And I guess what I'm saying is talk to Harold. If maybe you're not getting by, look at investments that can profit and protect the money that you have. As we close things out, Gibson Guitars filed for bankruptcy. There is a turnaround plan in place. They owe $500 million. They got a loan of up to $135 million to keep the business going. Wealthy Met fans, New York Mets, can buy a piece of the team as they're raising money. Jeff Bezos, the world's richest person, got richer last Thursday to the tune of $12 billion. He's worth $134 billion. He was the one who started Amazon. And obviously, if the stock goes up or down, he makes or loses billions in a day, which is mind-boggling to think about. And Yolanda Abreu got her check for severance. After 5 years working as a cardiologist, she let out a laugh of sheer disbelief. It was barely enough for a cup of coffee. Like her, millions of Venezuelans have seen their salaries decimated by rampant hyperinflation that is expected to drive prices up by 13,000% this year. That according to the IMF. Her story hit the headlines after she tweeted a photo of the check for $156,584.29 bolivars, which equate to about 20 cents in the black market. Very, very sad. I know a person that Harold loves and respects is Wayne Gretzky, and the old Wayne Gretzky line is go to where the puck is going to be. That may change now because it may become go to where the real estate profits are going to be. Wayne Gretzky just flipped a Southern California house for a $600,000 profit. And they actually, Janet, him and his wife, bought the home and they fixed it up, found it a little too small. They ended up selling it for a nice $600,000 profit. Now, they had a home on a golf course, Sherwood Country Club in Thousand Oaks, California. They owned that home. They sold it to a baseball player, and he lost it due to bankruptcy. They sold it for $18.5 million. They just bought it back for $13.5 million. So, Harold, Wayne Gretzky, he's making some real estate moves. Good for him.
He certainly is. What a great guy Wayne Gretzky is. So how lucky are we to have been able to see him play? I mean, hockey is exciting, but back when he was playing and even earlier than that, to me, that's when hockey was hockey. I grew up in Toronto, a Maple Leafs fan when Johnny Bower and, back in the 50s and 60s type of thing, but I've always followed hockey. Wayne Gretzky is the greatest of all time, and I've always said that he's got records that will never ever be beaten. I think he scored 245 points in 1 year, 100 goals, 145 assists. Nobody could ever come close to those numbers again. How fortunate were we in our lifetime, especially Albertans, to be able to see him play in person Just an amazing guy, and really happy he's still doing well in life.
It says here the two savvy real estate deals are the latest in a string of off-ice wins for Wayne, who has bought, remodeled, and sold tens of millions of dollars in residential real estate since retiring from the NHL. Of course, he owns now a small piece of the Edmonton Oilers and is one of the top executives within the organization. It's good to have Wayne around to help mentor Connor McDavid. Harold, we come to another show, and we really encourage people to definitely get our free weekly newsletter. 1-800-432-1022. Speak with you personally and privately about getting their name on the list. We send it out by email free of charge every week. Speak with you as well about investing in hard assets. And we thank you for your knowledge and another great podcast.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Once again, 1-800-432-1022, rarecoloreddiamonds.com. That's it. The World Financial Report podcast. My name is Randy Marshall for Harold Siegel. We will talk to you next week.